Indonesia's economy has had its slowest expansion in 6 years in 2015, and growth again fell short of expectations in the first quarter of this year, mostly due to that slump in commodities, which account for 60% of Indonesia's exports. I spoke with Ankur Patel, the Chief Investment Officer and Director of R-Squared Macro Management, and asked him how the government can diversify the economy away from its dependence on commodities.
In the short term, that's going to be very, very difficult for Indonesia to do. But in the long term, Indonesia has a very young, large population. And the big change that it can make in its economy is it could diversify and deregulate its retail sector. And Indonesia is trying to attract a lot of foreign direct investment to make that happen currently.
Well, President Widodo has tried to bring in some reforms. So how much of a setback is this disappointing GDP growth to his efforts to implement some reforms and rejuvenate the economy?
You know, from our perspective, it's not a huge setback. In a lot of ways, this is just a temporary blip in a much longer upward growth trend that Indonesia's on. The setback was largely driven also by government expenditures, and really the plan for Indonesia over the rest of this year is backed by a lot of the monetary policy stimulus you've seen to date. Indonesia is actually going to rely on government expenditures backed by a lot of the foreign direct investment that Indonesia is bringing on to really spend its way to, maybe somewhere in between 5 to 6% GDP growth rates year over year.
Well, speaking of monetary policy, emerging market economies have taken a knock from the strengthening dollar. What has this meant particularly for Indonesia, and what would happen if the Fed does go ahead with a summer rate interest hike?
Yeah, again, I think the big focus will be on what happens to foreign dollars that usually go into the emerging markets. Normally, if when the Fed raises rates, if it leads to a global risk aversion scenario, then that funding dries up. And in Indonesia's case, fortunately, because it's such a large economy, it's actually more insulated than some of its peers, countries such as South Korea and Taiwan, Singapore, and the like. So in the grand scheme of things, Indonesia certainly will be hurt if the Fed raises rates, but will be relatively insulated, which is why we think Indonesia is actually a very, very attractive destination for investments for the next year or two.
Well, is it an attractive destination? I know that President Widodo has issued new regulations opening dozens of business sectors to foreign investors. He's described this as a big bang liberalization of the economy. But are foreign companies taking the bait? Are they actually investing?
Yeah, and again, I don't think that's happened quite yet. But what we are seeing is that a lot of big governments around the world, countries such as China and Russia and South Korea, they're committing tens of billions of dollars to invest directly into China. And again, these are commitments, they're promises. A lot of the execution, the actual implementation still is yet to be seen. But if they do carry out the funding that they've promised so far, Indonesia stands to gain in a really dramatically big way.
And which particular business sectors are attracting the most foreign direct investment?
Currently, a lot of the retail sectors are. Again, just taking advantage of the fact that Indonesia largely has a very young population. That's, on one hand, has been very, very attractive. And then anything related to infrastructure investment has become very, very attractive. So, again, Indonesia is a very sprawling nation. And because of that, infrastructure has been a consistent challenge. But the more funding that goes into that space, there's a good return to be had.
Well, Ankur, you mentioned China. Now, Indonesia is one of the largest producers of coal. How much has China's slowdown and its active move away from coal impacted Indonesia here?
It's actually been a huge drag for Indonesia. If you look at energy exports out of Indonesia, they've fallen quite a bit, and not just in dollar terms, also in volume as well. And that's also really spurred the interest of the government to diversify its export base. But if you've seen Indonesia, it now actually has a trade surplus, so it does export more than it imports. So on the grand scheme of things, it's getting a lot of things right.
Well, you mentioned infrastructure. Now, with China's rebalancing towards the economy, and particularly the One Belt, One Road initiative, what opportunities does that present between China and Indonesia?
Yeah, if you look at where Indonesia is in the grand scheme of things in its economic development, it has a current account deficit, which really means that it every year needs to draw on a lot of foreign dollars to fund its economy. China, on the other hand, has a huge current account surplus, and since it is cutting back on infrastructure investment, like you mentioned, it's trying to direct its economy more towards consumption. China really is able to have a lot of those excess funding that it normally would have plowed into its own economy, and it's able to direct that to economies that actually need the funding, like Indonesia. So to the extent that this works for China, and it does, and Indonesia is certainly trying to attract a lot of the investment dollars, this is a win-win for both sides.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.